What's going on, everybody? It's Logan, also known as the Don from Infinite Money Trading. Going to be doing some live charting here. We're taking a look at EAF, GrafTech International. This is a manufacturing company. They produce electric products, something like that. So in terms of a sector, it is a lagging sector. That's what's important about it. It's not important what they do, but it's important to understand where they are. And since we've been really honing in on laggards and what's going on in these sectors and when is the breakout coming, today it's the 17th September. We're coming out of this, we're in a consolidation from the recent pullback, and we're seeing laggards really take off in a lot of these different sectors. And so this is a ticker that's really following that. And if you take a look recently right here, this recent uptrend is a major breakout. And there's a lot of different things that you could see here. We could have, you can see this trend line here that was broken. So you could have these two converging trend lines, have a bit of a bottom triangle, if you will. I wouldn't really say that it's exactly a bottom triangle here. I would say it would be a bottom triangle maybe from back here. And so maybe, it's just not as clear. What we're going to be taking a look at is a more recent development here, which would be this double bottom here. And so in terms of a double bottom, well, you need some sort of downtrend coming into it. And since it's a bit of a shorter pattern, we're not looking at this whole downtrend here. There's a little bit too much noise here. So what we're really looking at is some other channel in here that is also going to come into question over here, I would say. And so what we're going to try to do is figure that out. If you take a look, when we really get zoomed in here, you can see a significant amount of volatility. I mean, these are not, let's just take a look here. From open to open here, that's 56%. And so you're talking about, similar amounts of swings here. And so the question is this sustainable? Are we going to continue breaking out? And I would say, in terms of what I see here, breaking out over this peak of the double bottom, we're going to start to draw it out in a second. I see this going higher. We're going to take a look at what that number might be and then where that might go. So I'm getting my eyes on some supply in here. Let's start with trying to find what this trend is. We can all see this double bottom, but let's figure out what the inbound trend is going to be. And so, there's not going to be a lot of clarity. I think we need to just include all the price bars that we can and not look for wick touches as much as an average. And so what I would like to do, I would like to include from here, and I don't believe that we are at the top of the trend. So this is kind of what I'm saying here is that I believe there's still a trend to break out. So maybe if we get an average between these two wicks, let's see, that's a little bit too steep. I'm thinking more. Let's take a look at this here. Maybe around here. So these are about even. So a nice average between them. And then in terms of where the trend would start, we would not want to include this noise here. So let's say about one more day here. So this looks pretty good here. So what I'm thinking is this is a separate issue. I think this is more a part of a channel here. And so if we transpose this down, I'm going to do a similar story. Maybe about right here, we get this wick in that close. And so we're including, you can see how we sort of come up, we come down. The reason why I don't completely encompass these things when I do this is because this is a significant amount of selling and buying here. And if we just see the spikes here, that also sort of paints the story. And so when I see this, what we're really looking for is if we get on top of this trend line, then, take a look at where we are. So let's draw out this double bottom. So it's going to be the closest peak to here, so right there, and then we would want to take it on the red candle here. Coming up, when you're taking a look at, are we breaking here, breaking here? It's here because of when we first come down. And then again, same story. Now on the upside, you want the green candle included here. And then of course where we broke out. And now what's important here for a breakout is this resistance line. So if I just draw this across, I'm gonna have to fix the number up. So since we broke above that 739 here, that's what constitutes a full breakout. And so in terms of, which day it broke out, it could have been yesterday as well. I mean, both of them close above, but I would say this is obviously a lot clearer that we completely cleared off. And excuse me, this is actually a little bit higher, 741. So maybe not. So this candle actually closed right on the resistance. So it makes more sense that this is the real breakout, right? So you always want a confirmation. And so again, there's a lot of percent there, and there is volume here. Again, take a look. It's a significant breakout. That's what we want. And so taking a look at this, again, we're talking about major dips here. This is a lot of action. In terms of the amount of days as well, take a look at the amount of price bars here. This is not, these are major swings. This is not your scalp up and down, have a fun time. These are difficult trades. There's no way you're getting this trade. Like, even take a look at this gap up. That's difficult. This trade makes a little bit more sense because of the support. Again, double bottom support. But again, these are difficult trades. There's these trend lines, I think, paint a good picture is that you didn't actually have any clarity of where these trends were. And so until right now, when I'm averaging this, again, it's an average. It's not really clear. But I believe that this story is painted well enough. And so again, it depends. Every situation is very different. Let's take a look at some supply here. Again, it's a kind of a newer chart. If we take a look, it's about, it's like 600 bars or something like that. So let's take a look at some resistance coming up here. Maybe not so much. So, there is obviously some resistance here, but it's not 100% clear. Let's just start with the very top of resistance. I like this coming down here. If we just hone in right in here, right around here, that looks pretty strong. Let's go ahead. Maybe average between that 11.4 right here, 11.38. I like it. So in terms of an upper bound, about right there. Now what we do is we'll just take a look at this local, not even local. This is about 100 bars here for resistance. Nothing really up in here. So we have the trend line again. So we're really looking for horizontal. Maybe right here. I see some significant wick touches, especially on the way down. Okay, keep it with the 8s. I like that. In terms of support, I think this is fine on resistance. So we have immediate resistance here. So this is going to be a big decision is going to be made here. And so this is a very bullish chart. And so we're expecting velocity through. In terms of support, let's see here. I think I'm seeing really just one support right around in here, especially see where I have this resistance here from the breakout even. I would say let's keep it with the 8s again, 738. So you see me do this a lot. I'll keep it pretty synonymous with the digits. And again, it's usually whole numbers that we're looking at, but this also does happen. And I believe there's maybe a little bit more right here. Let's do another 10 cents down. Create a little bit of a zone in here. See the wick touches across. So in terms of a play, here's what we're looking at. So this is about a 6% from here to here. A lot of things can happen. This is going to be either we open, get rejected, come back down, and we test it again, or it's going to be an open up here, test this trend line, maybe come back down, test the support, and go back through. There's a couple things that can happen, right? I would say that this holds very strongly. I don't see that breaking. Extremely bullish. But I'm really more on the lines of opening, going through these, and really taking off. This chart, we're going to take another, a larger look at it. It's very bullish. Just in terms of this uptrend, just in terms of what we know about laggards right now. And take a look at the price action. I mean, is that not enough opportunity for anyone out here? I mean, what a lot of people are going to see is that there's rejection here, but the thing is that they might see a different trend line. I think I have a better understanding of an average of a trend line. And so if you think about this swinging back and forth between some trend lines and like a channel, people might actually see a channel and then not so much these horizontal resistances. And so they might already see that this is, a signal to sell. And a lot of people obviously hate coming up. And, I don't like to chase momentum either, but this is a breakout now. It wasn't a breakout before. Take a look at how we broke out of both of these levels of support now. And in terms of our double bottom, this wick here that came up, that's very strong. And so I would have loved to jumped on this today. I would not have sold as soon as we hit resistance here. I mean, there's plenty of room to grow. And so if we're taking a look at a target here, my upper bound would be up here, but I'm not going to include that in the target. That would be once we reach another target around here. And so I'm going to target, somewhere in this area. I'm going to take a look at sec, but the thing is that we might come in here, and then whatever the test is to come back down, or we create a new level in here, and then I would believe we come up in here. Again, this is the February high, and we're expecting laggards to be value picks. We're down here, and we're gonna come back up to the high, just like the rest of tickers. And so let me just take a look how many bars we're looking at. Let's see here. Right, and in terms of how long this is, all right, so this is pretty strong. We get inbound that's double the length of the pattern. I think that creates really nice velocity. In terms of where we're going, I'd like to say $9. I think that's a pretty good number. And if we compare it to over here, that's about 9. It's about 14.5%. And then in 42 days, I think it would be even less than that, but I think we have to also take into account some other things. So let's go ahead, type it out for you how I usually do it. EAF, double bottom. In terms of a lower bound, let's go with this here. It's about 42 days. I think it was about 84 if I'm not mistaken. So I have that here. In terms of technicals, I did take a look at the technicals already. I have them written down already. There's a triple moving average, the 4-day, 9-day, 18-day that I usually look at. So that was today on 9/17. And so the reason this comes into play is because of the way this is uptrending, and you can use that to compare a moving average from a reversal. So a 4-day, 9-day, 18-day, if you take a look at the last 4 days and then 9 days and then 18 days, the way they all cross over each other, that's a good way of seeing a reversal. On 9/16, the short-term KST looks bullish. 9/15, the CCI, MACD, and slow stochastic. And on 9/14, we had a moving average. Price crossed the moving averages of 21 and the 50-day, and on so we'd like to look at the 914. Also, you have momentum, Williams percent R, and fast stochastic. And so in terms of this trend here, it's extremely bullish. It has a lot of indication behind it when we take a look at averages. And the reason why that's important is because of how large these dips are. You want to be taking out averages as well, because it's not just that it looks good and bullish. You want to have a lot of demand behind that comparatively. And so that comes from clearing through a lot of averages, even though we want to think on the margin up here. And so that's why I bring up these technicals as well, even though what's important is what's going on in here. And so again, the play is going to be, let's see if I can get a better look at this. The play we're looking for. If we open up and sell at resistance, then we need to be patient and wait. I do not see it selling all the way back down. That's not something that is clear here. If it does, then we'll buy down here. If we open here as well, but we start to reverse and the demand starts coming in, you're looking at the book and you see the demand coming in. There's not really a level here, but it is possible that we could, when you have a lot of supply up here, price wants to gravitate to supply, and since we're closer here, we could start to gradually come back up. And when that happens, if there's enough demand, then that's a buy to come through. The other thing that we could do is we open right where we are. We push through with a lot of velocity. Now what's most likely is that we get rejected at the trend line here. Now this may not be exact, but the trend line is going to be very close to here. Come back down. This is our new support, and we break out. Or we just come through again like this, a big candle. And so what's going to be important is to watch what the demand is right here when we open. Because if there's a lot of demand and the bids are coming in, you're going to miss it. You're going to miss it. And so take a look at these candles. 1, 2, 3. There's only one candle in there that's not taking off, and that's probably more to do with the market and the fact that you can't be going straight up all the time. So this is a pretty ugly draw in here, but just to clarify what I'm looking at. So hope you guys found this interesting. I did have the live video plan that I told you guys, but again, this is a lot more helpful, I believe. It's better to see the charts going down. So if you have any questions, of course, you'll see me in chat. And until next time.